Hi everyone, Scott Williams with Aline Capital here, bringing you a bit of a market update. Today is Thursday, October 13th, and the significance of today is that we got the CPI data from September this morning, and hopes that it would be stagnant or up just mildly were again crushed by the market this morning, with reports coming out of inflation up 0.4% month over month, which brings us to 8.2% year over year. And although that 8.2% is off the highs, keep in mind that the month over month figure states that it is continuing to rise. All in all, not great news for the market and for real estate investors and other interest rate dependent businesses this morning, being that the Fed will likely have to continue potentially an even stronger and longer rate increasing period here. All anticipation was for an additional 75 basis point rate increase in the month of November. That is all but guaranteed. The biggest surprise this morning is that we are likely anticipating another 75 basis point increase by the end of the year, whereas we were hoping for a potential only 25 to 50 basis point move. So prior to this morning, the market had anticipated hopefully only an additional 140 basis points throughout the rate hiking cycle for the Fed, whereas it now looks like we're going to get additional 150 or a full 1.5% by just the end of the year. So what that means is that rates are already up 3% year to date since March, since the rate hike cycle began. That'll put us up a full 4.5% by the end of the year in just a 9 to 12 month span. Also, prime rate currently sitting at 6.25%. Additional 75 basis points is going to bring that to 7%, and then potential for the end of the year for prime rate to end up at 7.75%. For you floating rate folks out there, that'll bring the floating rate term SOFR index that's sitting just over 3.3 right now up to around 4% in November, and potentially 4.75 and maybe even nearing 5 by the end of the year. So some additional pain out there for us real estate investors. A lot of volatility in the market, one of the most volatile times since the 2008 crash. Debt rate assumptions are changing on a weekly basis right now, so please be reaching out to your investment sale and also your capital markets specialists that are helping you in your real estate transactions, making sure that you're getting the most up-to-date information as fast as things are changing. So I hope to be back with another update here soon, and at some point would love to give some positive news as well. Thanks.